Oh, can you see my screen?
No.
Now? Can you?
Yes.
Yeah, now we can see. We can see.
Okay.
Yeah, we can see.
All right. Okay, so welcome to the pre-budget review of the markets by Bangalore Investors Club on 27th Feb 2015. This is going to be a very different session. We're going to look at a different set of data. So broadly, what we could look forward to today, one, we'll look at some PE data versus budget, and that will be presented by Balki. There is some options data in terms of options pain and how the options pain is been playing out, and that's been sent to me by Vidya. He's not on the session today, but the charts that you see from here on will be because of him, so thank you, Vidya. And then we will look at sector stocks, right? And then Bobby, you have something sort of formal to present?
No, not even, not even close, nothing.
Okay.
I told you, right, I'll need to take a few printers. I mean, I have some idea for the different sectors since you asked.
Okay.
The first thing actually I'm focusing on is the structure of the decision-making committee, DIPP, how they delegate, and then the there are set. See, the thing is that whole defense. There are two key things, okay, to do in-depth study on, which no one is really, except maybe for some of the global analyst firms, right?
Mm-hmm.
One is how the Indian government is going to change the decision-making process and the offset policy, because that's a main bone of contention.
Okay.
Okay. The good news is they've cleared a lot of stuff in the past since these guys have come to power, right? Which was stuck for a long time, and a big benefactor of that is people. That's probably why the interest in people shot up, because there were a whole bunch of industrial licenses which got cleared for people.
Okay.
Besides ships, artillery. So
they got cleared
the
today?
two things you have to do is, I'm sorry?
They got cleared today?
No, it got cleared about a month,
Okay.
2 months back.
Okay. Go ahead.
It came out, and so that industrial licensing, one list I have somewhere in one of the many PDFs that I downloaded.
Sure.
I'll have to take a picture of that. So that is one section of it. The other section to do actually study would be all these. There are private firms, and when these aerospace components and all get put together. They'll be sourcing different parts from different vendors.
Right.
Okay, so Dynamatic Technologies, as you would have, I bought it at 2000 in my dad's account. Around 1190, it shot up by over 50%, and it was a good buy at the time because I knew that there would be moment. I mean, it is a clear-headed thing on my part. So that is one company. Right now, I would tell anyone who is interested in it to just dig into Dynamatic Technologies.
Okay.
The other is HPL Power Systems, purely for batteries and high-end batteries. But the thing that is what you have to go in and study and is that there are certifications, and when the big vendors go out, like when the global firms go out and try and partner or give business to the smaller companies, they would look for certain quality in terms of product, in terms of experience. And I'll just give out a few names: Investment and Precision Castings. And that you have to figure out that value chain, that global value chain. Okay, and because when they source out different part manufacturing to different companies, you already have to have that list. You understand what I'm saying? Hello?
Yeah, go ahead.
So that's one of the, and it's a little time consuming because the first thing is you have to figure out how these what all parts would be sourced for helicopters, and you'll have to go back into previous deals and history and stuff like that, which is how I found HBL Power Systems. So it's not as easy as the other things. because a lot of the other companies, like if you look at chemical, if you look at automobile, a lot of the research has already been done.
Yeah. Sorry to interrupt, but is this Pipavav chart that is on this thing? It is 77 rupees?
Yeah, I got it at around 40
Okay.
in my dad's account again. So
Cool, but it's at 77 rupees, is it Pipavav? Just want to confirm.
yeah.
So it's like way away from its life high. I'm a little surprised. I was expecting this stock to be like really doing some, rocking all over the place, but it's not.
I'll just come back 1 second.
Okay, so anyhow, so as you can see, it's coming to a very important support resistance zone, and it's coming there after quite a few years, after almost 4 or 5 years. So looks like it's now entered into, this is a weekly chart, and you can see that this huge volumes have built up. So you have some really strong double bottoms here, but they're far away down, obviously. Right. So somewhere there is some really good support, around 40. All right, good. And then we've had this massive volumes. Yeah. Technically, this stock is consolidating now, and you can see 75 is a really, really good support. Stick my neck out and say buy this. There's been a lot of interest by other large companies. M&M tried to look at a stake, but that didn't go through. Then Munjals are looking at it, of the Hero Group. So that's really good support at around 73.50. And this is like a flag almost. So we've got from say 50, just to be on the safe side, 50 to 80, 30 rupees. And should this, break out, this is like a pennant, then say so from 82 plus 30, we'll take it to 110. So of course 100 rupees is going to be a psychological mark that will offer some resistance. And then if it goes to 110, it's close to its life high, at least on the basis of the chart I have. And then after that, it could be a completely different story altogether. So one thing in defense you have to remember is that this Make in India business and transfer of technologies that will be required by the offset policy that Bobby is talking about, a lot of these companies are going to go into a completely different level of expertise, skills, capabilities, and their ability to deliver far more advanced stuff than they have ever been able to do. And that augurs well for the long-term prospects of these companies. So that's just something to keep in mind. And what I'm saying is once it's past 115, 120 on the life high basis, this stock could be 150, 200 bucks. Could be a multi-bagger in the years ahead. Never know. Right? Okay. That's it. Is Bobby back?
I'll just send a,
Yeah. Go ahead.
yeah, I'll just put a couple of, I think I'm probably over 300, 400 links. I'm tired of going through them. I'll have to filter it out. I'll just put a few random things. If anyone is interested, they can just take a look.
What are you putting?
I'll put in the chat box.
What names of companies?
Whatever I have randomly. I'm sorry?
You're going to put names of companies?
Companies, and what I do is I look at all these Frost and Sullivan and these.
Okay, so I'll tell you what, just do one thing. I mean, just to save time. Just put it on a mail, send it to me, and I'll put it in this text thing here, which I'll send out to everyone later.
Okay.
So that will be easier for everyone. Okay, anything else, Bobby?
No, nothing.
Okay, which was the other one? Dynamatic Tech, right? Oh,
Yeah.
okay, so here's the chart.
Dynamatic and HPL box.
Okay, so something is wrong with my data or the database for some reason. It's 1996, 2000, and then 2000, from 5 years seems to be missing. I'm not sure exactly what the problem is, but anyhow, we'll just deal with what we have. And you can see very clearly that it's easily on a life high, this stock, right? So even if I make this weekly, you can see that of late it's just gone into a completely different orbit altogether. right? And it did something last week, very dramatic. Okay. Alright, so this is the daily chart recently. A lot of consolidation around 2,500 for about 6 months. And then now it has gone up massively. Again, we are back to daily. And this is also looking like a flag, uptrend flag. Okay. And clearly massive volumes on the way up, consolidating. And if it breaks out, then we're talking about say 2,000 to 3,000. My God, that's 50%. So 3,000 to 4,000 maybe. This stock could get completely re-rated. It's already been re-rated, of course. Right. Question is how much more. Very tough to trade stocks like this. Rather than trade, best to just stay invested and ride out any volatility that you're likely to experience. So okay. Yeah. Just to point out that Bobby, do you have this stock? Have you bought this?
I mean, I had bought it, but my dad had sold it, so
What at a profit?
I think it's, I don't know, it must be around two. We didn't wait long enough, so that.
Okay. So fine. Done. Okay. Good start. So
Just take a look at this one if you can. Sika.
what?
I bought this today, just a few.
Sika Interplant. What do these guys do? Any idea?
Defense specialists.
SIK. It's not on the NSE.
Try SIK.
One sec. Is it on the BSE? Is it listed on the NSE? Can somebody check?
I'll just take.
Okay, it's there on the BSE, not on the
BSE 523606.
yeah. This is the one. Okay, wow. Something happened to it in 2005. Company's been around for a long time. By the way, this is a massive multi-year bowl. Okay, forget the volumes. In a small cap stock like this, volumes will be next to impossible. But this is a massive bowl consolidation that was going on for 20 rupees for 2 years. Would have just completely shattered your patience or given you nirvana, one of the two. Okay, and after that you can see what's happened. From 20 it has gone to 100, 5 times in 1 year, and still away, quite a few rupees away from its life high.
Is it triangle now?
One sec. Wouldn't say there's a triangle, some sort of consolidation for sure. At around 85 rupees, plus minus 2 rupees.
Weekly, is there a triangle?
No, I don't think so. Consolidation, rectangle, I would say. Okay, volumes will be tough to read in stocks like this, so I wouldn't pay too much attention to that. Should be bought only if it stays above 100, and then it could go to 120 quite quickly, or buy now at around 85, 87 rupees with a stop loss below 75, first target 120. Right, and once 120 goes, then life high is somewhere at 200 or something like that. Right. But high risk, if something goes the other way, the stock could easily be back to 50, 40 levels in no time. Though I'm assuming, based on what Bobby is saying, this is some unique company with some very unique abilities, and therefore probably well positioned now. It's like, waiting for decades in your life, and finally your time arrives for the big limelight. And that's maybe what this company is going to be experiencing in the months and years ahead, who knows. Or Axis ITMT. What do these guys do?
They're also the defense. I identified this long back. They're into defense. They are more into the intellectual, like defense designing systems, not necessarily hardware stuff like software.
Mm-hmm.
And
Okay.
so this is the one. I think the current price is 258.
Yeah. So this stock has clearly been trending up. You can see massive volumes on every up move. So every opportunity to buy this on a dip should be bought. Of course, it's gone from 100 to 200, or sorry, 300 almost in the last 6 months. So how many shares do you have, Bobby, of this?
My identified, but and I just I forgot about it.
Yeah, I forgot about it. Right.
This is I think that was a triangle around 100 or 100 and some. I'd drawn the triangle thing out. No, around 150 I think it was.
Yeah, there was a triangle here which clearly broke out.
Somewhere in
Okay, and if there's a triangle, then this is the one you're probably referring to. Okay. And then yeah, okay, so one more opportunity missed. Clearly broke out, and I'm sure it broke out with volumes. Yep, there you see it, the volumes here. Then it's gone really well up, 200 and then up. Okay. Fundamentally, most of these stocks are likely to be very expensive on a valuation basis, and these are the stocks which if you don't buy now, you should put them on your watch list, because not if but when sort of market correction comes for some local global reason, these were the stocks to definitely pick up. Right. I'll put up that link later, Bobby. Thanks. Okay. Cool. So let's just put it up. What else did we see? Axis, IT, NT, and Sika Interplant. All right. Any more? That's it, right?
there's one more. You can send.
HBL.
Yeah.
HBL Power Systems, is it?
Yeah.
These are the guys who make the submarines batteries.
Yeah.
Okay.
These guys and Excite are the main this thing. There's one more company called High Energy Batteries which is contending but really hasn't. I don't think they've made any progress.
Okay.
So that's for the the thing with this is now those. I don't know how much the submarine and manufacturing will take off, and even if it does take off, those are like all these things. These are one thing about the defense is you got to clear out, differentiate between stuff that will take 3-4 year projects and all this. You're not going to build a submarine in 6-8 months.
Yeah.
As far as I know, so. But the guys who get established in that, like I said, will be like Bharat Forge is one guy I would really take. I mean, if I want to take a leap into the future and really say that they're really well positioned in terms of size and all that stuff to really deliver, I would say Bharat Forge for the casting and forging and heavy ammunitions and all that stuff.
Okay.
So similarly for a very long term, I would say Pipavav, and they tied up. There's one shipyard called Mazagon or something.
Yeah.
MDL. So see, those are the huge projects which will take time. And you're talking about, but once that ball starts rolling, it will gain momentum on its own.
Yeah.
For the shorter term, I would say for the next year and a half, you can look at these smaller companies like the Sikanta plant, the HBL Power Systems,
Okay.
the smaller casting and precision companies.
Okay. Cool. So HBL Power Systems into specialist batteries. This one has also, of course, done extremely well. Gone from 10 rupees to 60 rupees since April last year. Almost 1 year, it's gone up 6 times. and you can see that November, December, Jan, Feb, the volumes have been massive, life high volumes actually, except you leave all this in between. This is the right corner if you just look at. On a consolidated basis, this would definitely be life high volumes, day in, day out for 4 months now, and clearly another flag, and that flag broke out today, in my opinion, right? Except not on volumes. So something like from 40 to 60, almost 20, and then let's say it broke around 55. We were talking about 75 as the next potential target. Only thing is volumes today were not there, but I think once it's past 58, then easily much higher. So almost all these stocks have uh, sort of been multi-baggers last few months, plus they're into some sort of a consolidation, and all of them seem to have a flag or a pennant in the short term right now, and we'll have to see how that whole pans out in the days and weeks ahead. Right? Okay. Cool. Right. So what we also talked about is Rolta and size. How do you see Nenta?
Yeah.
Rolta.
See, I'll just end with this because I think once I go through my the number of bookmarks I have, I itself get hyped. So I myself get hyped. I'll just end with this. I'll just make a see. There are some of these companies like this guy I'm putting up here who have small sections which are, if you open that link, they have a little bit to do with defense. I don't know how much
robotic systems.
How much how much it can grow into.
Okay.
But if you're looking at like the 3, 4, 5 year time period, then these should be looked into.
Okay. One thing.
Just take a look at that.
Yeah. Well. So one thing to remember is that with the budget tomorrow, there could actually be a lot of talk on the defense side and defense spending and defense budget itself. So if there is a big uptick in the defense budget, then you could just see all these stocks that we've discussed today just rally up, who knows, several percentage points, and never know where it goes, after that. So I just put up the website that high-tech robotic systems, and it says something about Auto Expo and something about Indian Defense Expo, unmanned military vehicle, and this is on the multimedia section. So they have defense robotics, something soft brain, unmanned ground vehicles, unmanned aerial vehicles, motion platforms, four-wheel robotic platform, mole, iris sensors, then they have automation. Wow, this is like really high-tech stuff. These guys will probably get bought out by somebody else, Then you have warehouse automation. Oh, this is really interesting because you're going to see many big mega warehouses that will come up in India because of the supply chain requirements that India is going to have. And companies like Amazon, like Flipkart and all other guys who are going to be the natural customers of these guys. And so this is already here. This is really interesting. I don't know what AGV is, right? But wow, this is something we need to really pay more attention to, and very interesting. I think the first website I have seen, at least with this three-dimensional, what do we call this thing on top? What do we call it? So scanned code. You put that, and you'll probably get some even more information. Wow, this is good. So what the stock saying? High tech. So this is Rolta. We'll come to that. So Rolta is
Rolta one that Rolta was in the news, right, for that 50,000 crore thing?
Yeah, one of the ones. So today it's gone up massively to 117 rupees. I know somebody who bought it at 115 or something, so that person should be sitting on it very happily. And yeah, clearly this is going up. Volumes are also very evident. Today there were massive volumes. Excuse me. And should be bought on every dip till 200, at least 200, 210, and after that 300, 350 is the next target. Okay. So Rolta, let's add that, and see it. Let me just see if this list is there. High-tech robotic systems. Is that a listed company? High-tech robotics?
Yeah, the main company is called High-Tech Gears. The robotics is a section of that.
Oh,
I had bought High-Tech Gears at around 270 and sold it.
and that's now at Life High. You are a real dodo. You're damn a genius at finding stocks, dodo at trading them.
Yeah, I'm changing that now. I bought some of Sika Interplant, and I told you I got my share count thing and I started clicking here and there.
Okay, so High-Tech Gears, so that's the parent company of High-Tech Robotics that we saw, and that's just been on a tear today. There's been a correction, so that's really interesting. Whether this is a opportunity to buy, because that's the life high of High-Tech Gears.
Yeah, I just want out of the Sika Interplant and this guy are not in popular. They're not known as much. So if by chance, because there's so much focus on defense, if by chance the news comes in for whatever deal, and I have a very strong feeling that Sika Interplant is very well positioned for it.
Okay.
I'm personally, I mean, whatever I've learned of behavioral finance, and if the timing is right, you can make a killing on those.
Sure.
Especially Sika Interplant. I'm just putting it on.
Okay. Cool. So you're going to put your money on it. Okay. So High-Tech Gears, one thing is it's broken the uptrend line of the last 7-8 months, but only tentatively. And it's gone up clearly on high volumes. It's coming down on very low volumes, much lower volumes. It's clearly consolidating. So shouldn't expect it to go down a lot. Maybe I would say worst case scenario sort of 275 if it breaks 300. Right now it's sitting just at that 50-day moving average and the 300 say sort of support, 300 rupee support. And only if it breaks that could you expect. Otherwise, interesting to watch tomorrow. All these stocks, by the way, should be on our watch list tomorrow during the budget. And if they could just be shooting all over the place. So for those who are looking for some excitement and some quick profits, I would even perhaps stick my neck out, say, buy some of these stocks tomorrow morning before the budget announcement starts. And well, I would say just pray after that. And if it goes down, don't be too disappointed. I think then buy more at lower levels. But on the other hand, if that doesn't happen, it just shoots up because of something Arun Jaitley says, you might be able to make a very, very quick, handsome profit over the next few days, maybe even by 3:30, right? If you do it on a margin. But if you're doing it on spot, then you'll have to wait for T+2. So that means only on Tuesday you'll be able to sell. And I think you could actually get some good profit on this. I doubt any of these are in the FNO, and even if they were, I would probably not recommend taking any positions given the risk that it entails. Right? Okay. Really good. I think so we have how many here? High-Tech Gears. 1, 2, 3, 4, 5, 6. Cool, yeah. Great, Bobby. Done. Are you coming for the session tomorrow, budget?
Yeah, I think I should be there by 10.
Okay, fine. So good. Come with the longer list and come on time. So maybe we can.
Yeah. No, I'll talk to you later. I need to.
Because we can just put it up for monitoring. That's why. That's all. Nothing else. No other.
And I think the main one I guess would be Astra Microwaves, which is itching to break out. You can just take a look at the chart.
Astra Microwaves. Okay, let's look at it. Yeah, interesting. It's coming back to its life high. Why did it what happened in 2005? It'd be good to find out some sort of, fundamental or news on this timeline on this, if we can get it from so far back. It will be tough, I know, but still, because something happened to make the stock go from something like 10 rupees to 200 rupees in 3 years. Look at that, 2003 to 2005. Must have been up to something which really took the stock up massively. Was it manipulation? And then it came back down to say 40 bucks, and then now it's on another up move. So a little not just curious, but definitely it'd be good to know if what the hell happened for such re-rating both up and down to go on. So this one is also showing the flag pattern, and today did it break out? Yes, it looks like it broke out today. Okay, so move from 120 to 160, so that's 40 bucks. It has, in my opinion, broken out today. And so 120, 160, 40, say 150.
What are the volumes?
190. Oh, consolidation there, as you can see. So it went up on good volumes, then consolidated on low volumes. Today has been higher than the last 2 weeks. So I would say next target 190. Very nice that we have resistance there at 188 from the past. Is that oh, that's the life high. And if that breaks out, then who knows, this could be 250, 300 also. Wow, okay. I think we've got our hands full actually. Very interesting. All right. Yeah, I would say I am really very tempted to say, given the patterns we are seeing, given the event that we have, given the focus on budget and this Make in India theme, all these stocks that Bobby has listed for us, I would say buy at least a few tomorrow morning before the budget starts, and then just hang tight. And in case it's a bad day on these stocks tomorrow, then I don't think you should be disappointed. The good news on those will eventually come, and at that time you can see these stocks probably go much higher. So both from a technical flag perspectives, I think each of them have 10, 15, 20% potential, and from a theme long-term defense perspective, this could yet be multi-baggers, even though some of them already are. Right, so think about it. We've got the whole night and probably a good 15 hours to do some thinking, and at least probably 2 hours before the budget starts to do some trading on those. Right, great, Bobby. Are we done?
I think
okay, looks like Bobby is tired. okay, right, good. Thanks a lot. That was, I think, excellent inputs for everyone to follow up. Good. Anybody has any comments, any questions? No? Okay. So Balki, can I hand it over to you to look at the PE charts for us? Are you ready? Balki? Okay, so what we're going to do next is we're going to go over to Balki and he's going to discuss what the PE ratios have been around the budget time over the last, I think, 10 years at least. This was a question that was asked by, I'm not sure who, but a really good question. Oh, I think, yeah, just in time. Surya. Good. So when we had the last session, Surya was asking about how the market, as we all know, the P ratio of the Nifty is around 23 right now, and that's definitely not on the cheap side and is beginning to be expensive for sure. So the question that was asked was, at the budget time in the last whatever history we have, how has the P ratio been, and can that tell us anything about what to expect on the budget outcomes? So just to quickly overview, in case you have not watched the previous pre-budget review that was put up on the Watch BIC YouTube channel for everybody's viewing for free, In that we discussed that generally the budget has gone up, sorry, the Nifty Sensex have gone up around 2% on an average after the budget over the next 1 week, 1 month. And there were some sectors like capital goods, banks, metals, which have done exceptionally well. And we were looking at potential strategies around that if anybody has done some more work. But along with that was one of these questions about the P ratio and fundamental levels and whether those could tell us some, give us more insight. So we'll do that. So I'm just handing over. So you are now the presenter, Balki. Go ahead.
Okay.
So we need to see Balki.
Can you see my screen?
Nope, not yet. Yeah, now I can.
Okay. Wanted to show 3 screens. One was this screen which was, I think, which Bobby shared from Business Standard, which was talking about generally what is the post-budget return on various sectors. This news came yesterday. As Musa was saying, I think the big ones moves are generally in banks, infra or capital goods, metals. I think these are the 3 sectors which have given high returns in 3 months. So here you can see 1 month, 2 month and 3 month return. Okay, so this was not the one which we were looking at. What the other one we were looking at was, okay, on the budget day, okay, this is from the ICICI direct report which I had sent to the Bangalore Investors Club Yahoo group. So this report, in this report you have a last page which gives the 1 month return post budget and what is the return on the budget day. So I think one interesting thing is generally budget day returns are, most of the time it is negative or very minimal, like I think there is one here 1.1, but otherwise it is 0.5, generally minus. Anyway, that's a different thing. But what exactly we are looking at is what is the return 1 month after the budget for Sensex and other indices like auto, banks, goods, capital goods, FMCG, oil and gas and power. So the question, okay, you can see here that generally the returns for Sensex are in the range of, you can say 2 to 8%. Of course, there are some outliers here like minus 11%, etc. But generally in the range of 2 to 8%. And we wanted to see the what are the P ratios on these on these specific budget days. So I have a chart here which shows, okay, this is the, I think you may have a problem in 1 minute. This is my P ratio chart. I just let me show the, okay, this is a very long chart and it gives me a lot of problem with Excel, but wanted to show that the current P ratio is around 22 or 23, and which is slightly above mean plus 1 standard deviation. Okay, and sorry. And generally we have seen P mean plus 1 standard deviation is sometimes a resistance level, but there are cases where it has gone beyond P plus 1 standard deviation also. But the more important thing was to look at oh shit. Sorry. This is a very heavy sheet, so it gives a lot of problem. Yeah. Okay, can you see this? Hello?
Yeah, I can see.
Okay. Yeah. Okay. So this is the same table which you look at saw at the ICICI direct report. So I had given what is the P on those days. So if you see now, I think we now have, this is as of 25th. So we have the highest P on the budget day as of now, and I really did not see any major correlation between the P ratio and the return within 1 month. Anybody else has any other comments on that?
Yeah. Actually, what's interesting is on 28th Feb 2008, the P ratio was 22.53, right? And that year, I think the market fell 10% post budget. But of course, that was also the year of the crash. But that's the highest P it comes to. Of course, we have February 11 and February 2010 and 2011 is we were at 20s, and 2014 we were also at 20. So the highest was on 2008, and the market, actually came down. So if we were to look at that, then maybe not very good news for the next 1 week, 1 month in terms of valuation. So no matter what the budget does, maybe we'll actually go down if I just look at this. Just making a uh, broad statement here, just observations. They might not be statistically valid. Yeah, so that's something that caught my eye, so I'm mentioning it there.
Okay.
Yeah. Okay, but apart from that, I don't think. Of course, in 2004-5, the P was already low at 12, 15, and all that. So that's all right. Okay. On this chart, Balki, where is your mean? Mean is the orange. Mean is the orange. Okay.
This is the mean.
Okay. Can you just put it so that the whole chart is visible?
I'm not able to do that.
You'll have to shrink it. Okay.
This is the best I can do.
Okay.
I'll go one more. Yeah.
Okay. This is from 1999, right?
This is no 1910, but sometimes it shows from 2005 only. So I don't know. There is, because it has so many. I think they say it can hold maximum 1,000 points or something. So that's why Excel keeps shifting between. Actually, what you are seeing now is from 2005.
Oh, okay. Okay, just hold on. So as you can see, fundamentally we are clearly expensive, and we are above that mean plus 1 standard deviation, and that's definitely not good. If you look at the middle of the screen, you'll see that right in the middle between the two peaks tends to get unstable when it goes there. So if you're looking from an investment perspective, probably not a good time to put in some money. Probably a good time to just trade. And once the budget euphoria is over on say Tuesday, Wednesday, then it'll be back to business as usual. And after that, my reading, both technically and fundamentally, after looking at this, is that you should be prepared for a correction rather than a continuation of up move. And that correction will probably be a really good one to enter the market. So just keep that in mind. So any of your long-term portfolios, you may want to get out at the appropriate time. There's no technical reason yet, but fundamentally it is time to go light on long-term investments. Okay, good. Anything else, Balki?
Is there anything like it will come back and take support at mean plus 1 standard deviation? Because I have mean plus 1 standard deviation and mean plus 2 standard deviations have been resistances, but there is nothing like it will come back to, let's say here, mean plus 1 standard deviation.
No, I don't think so. I mean, they're just general reference points. I don't think there's anything like that. At least that's my view.
Okay.
Yeah. Okay. Anything else?
That's it.
That's it. Okay. Great, Balki. Thank you so much for that. So I'm becoming present.
I'll give it to you.
Yeah.
I think definitely we can expect some corrections after this budget euphoria and all, I think.
Yeah. So let's just put this up, Balki. P basis, the market is at mean is over mean plus 1 SD. That is not good from long-term investment. Would expect correction post budget once it's back to business as usual. Right, so go light on long-term investments, good for trading. Okay, good. Any questions?
No question. I had one comment based on this research, budget-related research reports. I was comparing those reports, and most of them there is a unanimity that generally budget will have positive impact. This budget will have positive impact on banking and NBFCs, capital goods, cement, construction, hotels, IT, media, metals, oil and gas, and power. And it will be neutral on auto, FMCG, pharmaceuticals, real estate. One of the reports said pharmaceutical may be positive, but when they say, how they say positive and neutral is, they list out what are the expectations on the budget and whether that expectation will be met as per that research. Whatever, as per that broker.
Right.
If the expectation is met, if the expectation is going to be met, then he thinks it's positive. So he's, wherever, for example, banking, he thinks most of the expectations will be met. Whereas real estate, he thinks most of the expectations may not be met. That's why he's saying it's neutral. He doesn't say anything as negative.
Yeah, okay. So, just can we repeat that overall? Infra, banking, NBFCs?
Banking and NBFC, banking and NBFC, capital goods and infra, cement and construction, IT, media, metals, oil and gas, and power, and of course paints also here.
Okay, and neutral on?
But the neutral is auto, major ones: auto, FMCG, pharma, and real estate.
Pharma. Okay. Okay, interesting that real estate is going to be neutral. Okay, fine, done. Have we covered most of the stuff then?
Yeah, I think so.
Done. Okay, done. Anyone with any comments, any thoughts, any questions? No? Okay. All right, so next we will look at the options data that Vidya has sent. Let me bring that up, and we look at what that is saying. Okay, I hope you should be able to see my screen. Yeah, 1 second. Okay, I'm just going to leave you for 2 minutes. I'll be back. So while I'm gone, just observe the screen and see what you make of it, and we'll come back and discuss it. Yeah, just give me 2 minutes. Thank you.
Yeah.
Okay, so what do you make out of what you see on the screen? The OI's data. Any comments?
What is the difference between the top chart and the bottom chart?
The top chart is just the absolute number, the bottom charts are the change.
Oh, okay.
Okay, so this chart is only open interest, right? But this is change in open interest. So the bottom chart shows you what has changed from day to day over the last 5 days. And the top chart is the actual absolute number. Okay, so that's clear, I hope. Yeah, so as you can very clearly see, the Nifty has been between 8,600 to 8,850 today, 8,900 also. And on the left side here, you've got the put, and you can see that going from, this is a little different the way the data is arranged, from right to left just in this bar. You can see that the 8,500 put option has increased every day for the last 5 days, and that's the strongest level which is there. Of course, 8.8 is also become strong today, and then we have 8. So in order of strength, 8,500 highest strength, then there's probably evenly between 8.6 and 8.8, and there's 8.7 in between. So market unlikely, at least if you go by this, unlikely to go below 8,500 right now, or there's a hell of a lot of short positions that have been built up, right? So this is one thing on the put side, and you can see that today there has been a huge increase in the open interest in all the puts at 8.5, having the highest increase of over 1 lakh, I think almost 1 lakh, right? 1, 2, 3, 4, 5, yeah, 1 million shares, sorry, increased in OI on the 8,500, followed by 8,600 having huge OI increase. So that's massive support at that 8.5, 8.6 levels. And as we already discussed in the previous session, is that, how do I make this work? Yeah. You can look at the S&P chart Nifty, and you can see that the 8,500, 8,600 levels are very good support in terms of the trend lines. And so we are talking about basically this zone here. You've got a sort of double trend line there, and a psychological number at 8.5, which is there. Plus you've got the 50-day moving average right inside. So massive support at 8,500, 8,600 levels. And as a matter of fact, in the FNO class, we were discussing quite a lot of different bullish strategies. Please go and watch the pre-budget IMR that we did. We discussed some specific trades that could be done for the budget. Those trades are still valid for tomorrow morning before the budget is announced. So the OI data is sort of confirming this support and the opinion that we were having. And then if you look on the call side, we have this massive call open interest at 9,000, and then much lower at 9.1, 9.2, and even 9.3. And today what you can see is there's been a fantastic increase in the 9,000 open interest, 9,000 call OI, and well, it's either obviously resistance, or it is a lot of people hedging for or speculating for a big breakout move that could happen on the market. So it's one of the two. Obviously, who is right and who is wrong, we'll know only I guess tomorrow noon or lunchtime. Worst case scenario, the cat will be out of the bag, and we'll know what will be happening to this. It'll be really interesting to watch the open interest data tomorrow live and see how that pans out. So that will be something to do as one of the lists of tomorrow. So this is that data, plus you see this. This is the open interest, the option pain chart. This is for as if I click the next, you'll see that it will change. You can see, notice this on the left side and on the right side, how this is changing. This level is at 8,700, so that's where the option pain is. The least pain is at 8,700, and more or less I think it doesn't move. So you can see that the vertical line is not okay. The vertical line has now moved, and it is now at 8,800, and I think that happened today. Yeah, that move happened today, the 8,800. So till yesterday it was at 8.7, and now with today's move up in the market, this has also moved to 8,800. You can also see, if you look on the left side, the massive increase in support. I'm going backwards now, right? This is for the last 5 days, and just going forward now from 5 days to now, you can see, just observe the red side on the left and how it increases very rapidly after this, right? So you could see that going back again and going forward again, and you can see the massive. And same thing has happened for the blue side also. So the market is sort of getting boxed in, But of course, this is all the way to 10,200, etc. So that's much higher. So 8,800 is where the max pain is right now. And of course, that's that's only for tomorrow, and we are still very far away from expiry, so this could clearly change. But showing you that both on the call side and on the OI side, massive increase in OIs and money at stake that is there, right? So this is from Vidya. Just to add to what we have discussed about what levels maybe we should look out for, and with that, so my thanks to Vidya for sending this today. Let's now look at the individual stocks, right? Let me just make a note of that. A very significant increase in OI in 9,000 call and 8,500 put. Others types of importance. All right, so that's yeah.
Musa, one observation from the last budget. See, the last budget day, that was on 10th of July, we had a meeting in BIC, and on that day, market opened, and during the budget, it went up 150 points, and then it crashed, and it closed 150 points below. That means the move through the day was almost 300 points, 350 points.
On the Nifty.
Yeah.
Okay.
It opened at 7,590, went to 7,730.
Okay.
And came down to 7,480.
Okay. Very, very important observation. Thank you for sharing that.
Because now looking at that 9,000, that reminded me, because we are at 88.50.
Yeah.
Quite possible that we may go to 9,000 and then come down.
Yeah, very, very possible. It could easily happen. It could come down to maybe 8.5 or something like that. We don't know. So yeah, I mean, that's extremely insightful. Thank you for sharing that. And which means that any profits that anybody might have on the long side, you might want to quickly take them if the market starts to turn. And that could happen based on something that JT says that the market doesn't like, or it might just happen in the afternoon once the budget is over and the market just says, you know what, fine, we are done, and now let's just go back to business as normal, and the profit booking happens or selling happens. We don't know. So watch out. I'm sure it's going to be an interesting day, and we'll see how that goes. In the very short term, just to point out, so this would be a symmetrical triangle almost. All right, and yeah, what almost? It is a symmetrical triangle. Can't get it more perfect than this. And the breakout of that is the measuring implication. Breakout or breakdown is easily, I mean, just to be on the conservative side here, is from 8950 to 8485. So 450, 500 points. So we are talking about let's say 9,200 on the upside versus say 8,300 on the downside. And if you look at the downside side, 8,300 is more or less here. It's a lot of support, including an old life high running there. So this white line more or less in that zone, a little bit higher probably. But that's where we could go to, or we'll make a new life high all the way to 9,200. May not happen tomorrow only. Tomorrow itself, we're talking about almost a 8% move. But just be clear that we have a symmetrical triangle, which is talking about a potential 500 move either ways. And we have to just wait for the market to decide which way it wants to do that. Today, of course, has been really good volume, which is very, very unusual actually, because on the Thursday you'll get very high volume on expiry day, and the day after that is clearly low volume. But this time it's been a completely different picture, very high volume. So interesting. What might actually be happening in the market, really uh, um, don't know, but clearly buying seems to be the order of the day, if we go by the data we have seen. But 9,000, that level on the option side, is something to definitely be a little definitely paying attention to that. Let's just put it that way. Okay, so that's about the Nifty. I think with that we've got some levels on the Nifty to look forward to. 9,000 of course there, then 9,200, and interestingly, by the way, 9,200, if I just put a line there, there of course every line will meet any other line if they are at angles. So going, just putting a trajectory, if you follow the mouse here, somewhere maybe middle next week, that resistance line is also there. The 9,200 is the target for the symmetrical triangle. The only thing that's coming in the way is the 9,000 call option and the life high resistance. But once that goes, I think 9.2 is clearly on the cards. On the other hand, downside, 9.5, 9.6, obviously excellent support. Moving average, trend line, double trend line, the options data and all. And if that is going to be pretty difficult to break, and if that breaks, but then 8.3 would be the other side. I'm biased on the long side, and I think some people in the FNO who has bought some call options and are making money already over today, and are amazed as to some of their first option trades actually. So they're quite happy with what has happened on their portfolio. And tomorrow it could massively jump, but it could massively get back. Okay, so the view on the Nifty is clear. 9,000 first and 9,200 next. And on the other hand, 9,600 excellent support, and 9,300 seems to be the worst case scenario as of now. Okay, all right. So that's it on the Nifty. Let's look at the sector indices, and then we will perhaps wind up for today. It's already 9:30, and we can look at individual stocks during the session tomorrow. Okay, so this is the Bank Nifty. So if you look at the Bank Nifty, you can clearly see that it took really good support at this level of 18,600. We had recommended selling the 19,500 February call last week, and if you did that, you clearly made quite a bit of money. I think you made 750 rupees or 1,000 rupees per call that you wrote just 3 days back. That would have expired worthless clearly, the 19,500 call. Or for those who are willing to take higher risk, I even mentioned a 19,300 call to be written on the Bank Nifty, which I think would have made you 12 or 1,300 rupees per contract written. All right, so now the Bank Nifty has jumped up from the support. I think we'll just leave it at that because it really depends on what the budget says. As Balki also said, and based on the research reports he's read extensively, that the budget is expected to be positive on this sector. So let's wait and watch. On the top side, I think 20,000, or of course 19,500 first resistance, 20,000 could be the next resistance. For those of us who are trading, I would stick my neck out and say tomorrow morning, maybe before the budget, buy the 9,000 call on the Nifty side, buy the 19,500 call on the Bank Nifty side. Let me just get the option chain. So this is the Nifty OI for March, of course, now, and you can see that if you're talking about the 9,000, that's 138 rupees. It went up 50 bucks almost today, and should be more or less the same price tomorrow. So we are talking about 138 into 25. The lot size, that's 3,500 rupees that you'd have to be spending. Worst case scenario, even if it drops like a rock, I'm sure you can get out at 50 bucks or 40 bucks. So you're talking about 2,500 rupees as a potential loss. But if the budget is good, then this could easily go to 9,000, and at that point, who knows? This will, I would say, at least be 200 rupees. So you're talking about 50, 60 rupees that you could make. So If it's something that appeals to you, then you could consider it. And of course, that is an intraday trade only. If the market ends like a Marubozu tomorrow, strong green Marubozu or a white Marubozu with good volumes, then on Monday, Tuesday, this 138 option might be 138 rupees, 9,000 call option could easily be 250 rupees also. And consider if the market were to jump to say 9.1 or 9.2 in the next 1 week, then this could easily be 300 rupees also. So you're talking about 100% return on your 138 rupees. So think about it. On the or anything cheaper, whatever meets your fancy. 9,200 is 64 rupees. You could look at that. I don't think I would look too much beyond that. Nine or even maybe 9,300. If that's just what, how much? 41 into 25 with just 1,000 rupees. You wanted to get an experience of intraday trade. I think you can't get a more perfect situation than this at a very low risk to your wallet. So 9,300 or the 9,200 call to be bought before the budget tomorrow, with the expectation, the bias being that the budget would be positive and the market would jump, and you would make maybe definitely a few hundred, most likely a few hundred rupees on that intraday trade. So those of you who are coming to BIC for the session tomorrow, be prepared for this, and those who are not, think about doing it from home, right? Okay, great. On the bank Nifty side, let me maybe just put that up also. So a separate chart. Okay, so this is the Bank Nifty option chain, and we are talking about bullish bias, and you can see that on the 19,500 side, which also has the highest sort of, or not the highest, but pretty decent OI, and then there's 20,000 of course at 3,70,000. At 19,500, you're talking about 191 rupees. 448 rupees as the option. 448 right into 25 is 11,000 rupees. So of course a lot more expensive than the Nifty options. That's basically because the strike price is at 19,000. Those are 9,000. There's a full 10,000 rupee difference. That's the reason. But it'll if it goes up to say the 19,500 at 448, goes the Nifty, Bank Nifty sort of goes up a couple of 100 points, then this could easily be 600 rupees. So you're talking about 5,000 rupees, 200 rupees up, so 5,000 rupees profit that you could make. On the other hand, if tumbles by 200-300 rupees, then that's a 5,000 loss that you could take. Of course, you can put your stop loss orders. There should probably be plenty of trading in the 19,500, the 20,000, and the 19,000 strike prices. If you do any others, you can see that OIs are already very low, and you're going to have bid-ask problems and liquidity issues, right? So just stick with the 19,000, stick with the 19,500, and stick with the 20,000 call. If you want something much cheaper, it's 276 rupees, almost half the price of 448. You will have to invest 7,000 rupees as the price of the option. Okay. Otherwise, those who want something a lot more secure, then you could do an out-of-the-money bull spread, which is buy the 19,500 call and short the 20,000 call. All right. So effectively, you'll be long on 448, you'll be short on 276. So we are talking about out of the money bullish spread, right? And that will cost you just 172 rupees net, and that's 4,300 rupees. And on the other hand, if the market goes up, you could easily make 5,000-6,000 rupees as profit. So, and then this is not an intraday trade. This could be something that you could hold for quite a few weeks if the market is bullish. So think about that. So just let me list it out. Oh, can't do that. Bank Nifty by the 19,500 call or 20,000 call, naked long, few thousand. This is the potential loss. Bank Nifty out of the money, bullish spread by 19,500 call and short 20,000 call, right? Net cost 172 rupees. That is basically the 448, okay, minus 276, which is equal to 172 into 25 lot size, which is equal to 4,300 INR. So that's your sort of worst case scenario, right? And if the market goes up, and this could be okay. So the first one, let me just intraday trade buy before budget starts. Okay, this is a multi-day week trade. Okay, so 500 minus 172, 328, max loss 4300, max profit 8,200. Not bad, 2:1 almost, right? And then you could do as many lots of this as you wish, and you could do something equivalent on the Nifty side, right? So you could go, so let's do that. Nifty intraday trade, naked calls long, right? So let's get that. This is the data for that. So again, you have to be clear why we are saying this, because we are expecting the bias is bullish for at least 1 day, right? And like Balki said, you know, there could also be a big turnaround. 150 points was the last budget, though that was not a full budget. However, something to keep in mind, given also the technical levels that we spoke about here on the Nifty. So don't forget that the symmetrical triangle, the resistances on the OI, and all that. So putting all that together, if you want to look at that intraday thing, then we could look at the 9,000 call, and that is like we said at 138 rupees, 139 into 25, so 139 35, 3475, right? That's your max loss, and if the market goes up, then you could easily make I would say 200 points on this. So 139 could be, I would say, 400 if the Nifty goes to 9,200, let's say. So you could make double your money. You could also look at the 9,200 call if you find this expensive, the 9,500, and that is at 65 rupees basically, and that would be 1625. So right, so this is I think these are trades you should really look at. You can put a stop loss, like I said, for all your intraday trades, and as long as you're in liquid options, and limit your loss. So out of this 3,400 here, maybe you lose 1500 at best, and out of the 1600 you lose 800 rupees at best, is what I'm saying. That is if the market were to come down, which is not expected to. Then we could also look at a bullish spread on Nifty. This would be multi-days, even 2 to 3 weeks before, or it obviously can't go beyond till expiry. Here you have a range of strike prices, unlike the Bank Nifty where you had liquidity issues, so only 19,000, 19,500 and 19 and 20,000 that we could look at. Basically, given that 9,000 is a big resistance, then I think that should be an important part of your strategy or the approach. So if you look at the current situation, then you're looking at 8.9 or 8.8. 240 is 8,800 call is 241 rupees. The 8,900 call a little bit out of the money is 185 rupees. So you could take that as the long position, which is either the 8.8 or the 8.5. Okay, go long on 8,800 or 8,900 Nifty call, and go short on 9,000 or 9100 or 9200 call. Right, so we can build a range of scenarios with this. 8.8 to 9,000 in my opinion is too short. It's just 200 points, and as we saw today itself, the Nifty did 150 points. So this is not, you want to pay attention to the spread being wide enough. Right, if the spread is too narrow, you're not really going to make much money, and you're not going to use the move effectively. If it's too wide, then the trade becomes expensive. So that's the challenge which we have. And going back to our discussion, I think 9,000, 9,200 tops is what we could expect, with also the symmetrical triangle. So we're talking about from the current price about 350 points. So I would say instead of writing the 9,000, then preferably write the 9,200 option, just to give ourselves leeway. So if you do that and go long on say the 8.8 or call, which is how much? So the 8,800 call is 241 rupees. Right, short the 9.2 call, which is 65 rupees. All right, so we are talking about going long on 8.8, going short. So your net is basically 241 minus 65, that is 176 rupees into 25 lot size, okay, which is 4,400, and that's your max, which is also the max loss if it if the market expires below 8,800, right, or 8,800 or less. On the other hand, your max profit is the width of the spread, which is 400 points minus what you have paid, 176, which is 224 into 25, 5,600. So that's the maximum profit. So you spend maximum of 44, you may actually make 5,600. So that's more than 100% return that you could get. And listen, this is all expecting, you're talking about if you just hold on to this spread till expiry, or you square both of them off sometime in the future. The other choice would easily be just to manage each of these legs independently, and depending on which one is going to cut your profits or your loss or increase your loss, then square off on that. And these two trades, I think, are definitely what every one of us could be looking at. If nothing else, actually I'll stick my neck out and say trade any one of this, at least any one of this, so that you get a sense. If you don't put the money on the table, you know how we are. We not really learn. Put the money on the table and learn, and I think you will learn a lot of lessons. And well, God willing, we'll also make some decent money on this. So yeah, any questions? Since the bank nifty and the nifty are the most liquid ones, that's what I focused on. All the other sectors are more or less don't have any liquidity, and that's why I'm not uh, going into details of that. Okay, yeah, some of us have a 6:30 class tomorrow, FNO. So you want to carry on, you can carry on. Others can stick around. Any questions? No? All right. So let's just quickly finish off the rest of the sectors so that we have a sense of what we need to look at. So we finished Bank Nifty, right? I mean, we already mentioned that. Let's look at all the other sectors. So BA Power, wow, this is really something. Has broken through that second resistance. This is very, very impressive. Obviously, the market expecting some good stuff. Power, it has to be noted now. Okay. Weekend breakout. So we'll just make this a little clean. Okay. So watch that. I'll just put it in the other screen, then I can put it back. Okay. Realty. All right. So that's also a significant breakout. You can see the consolidation that's been going on Realty. All right. One thing about Realty to remember: multi-year downtrend broken, and Realty is doing extremely well as a sector. All right. Then. So IT showing some hesitation, so really nothing pre-budget. Mid caps, okay, with the rest of the market showing bullishness. Nifty Junior, okay, same thing. All right, so let's back to Nifty Junior. As you can see, the Nifty Junior and the mid cap is where most strength is. And the reason we are saying that is that it's basically back to its life high, right? And the Nifty, the large caps are clearly the laggards right now. So if you wanted big action, big moves, it's possibly sitting in the mid cap space. Energy, big move, nothing significant though. CNX Infra, okay, big move. Pharma starting to show hesitation. You know, Pharma has got a sort of double top, right? That's what we have to question. So going again with what Balki's findings on the sector expectations were, Pharma is not a favorite. PSU banks done well, okay, but this is I don't know. I don't like the looks of it. This is just a technical bounce. Lots of resistances on top, right? So if there's nothing big, then PSU banks could be the stocks to short, right? Technical bounce, nothing much else which is there, but 200-day moving average is right there, so watch for that. But there's resistances at all these higher levels, so that's stuck in a range now. VIX has dropped. Oh, this is interesting. So this is really interesting that the volatility index has actually come down. Of course, that tends to happen when the market tends to rally, but that means also the implied volatilities have actually cooled off a bit. That's interesting. would have expected them to actually go up just before the budget. So BSE Auto, so this flag didn't work out. All right, clearly it broke down. That's the importance of, let me keep it back for future lessons. Importance of waiting for confirmation or a breakout before we trade any pattern. Right, so autos weak, then consumer durables. Okay, there's nothing much that we have. The Nifty there. Capital goods, wow. So capital goods has a breakout. All right. FMCG, oh, very interesting. FMCG has a hanging man. So could FMCG be the place to short along with PSU banks? That's interesting. Healthcare, pharma together. Okay, well, metals. All right. So metals, technically, I mean, I like this a lot now, right? Metals, very strong bottom, probably, right? You've seen this multiple, this support downtrend line being broken. The only issue on top is the very significant resistance of 10,700, and then the moving average is long term. But you're now getting a higher bottom very clearly. Okay, that's the higher bottom. Right, and we could also be sort of tentatively getting a head and shoulder which could be forming, though it's little maybe imagining things. But I hope you can see what I'm seeing, that this downtrend in metals is clearly over. So after the re-rating that happened in the middle of 2013, from 6,000 to 14,000, it doubled. This is a major correction that was required, which came back to a really important multi-year test resistance, broke that, took support at a lower level. This was that big head and shoulder inverted that we talked about in 2013, 2014, where some of us made some good money, I think. And so if I was looking at metals, I think I would just look at all the stocks: Tata Steel, Jindal, Sterlite, Hindalco, CESA, and MBC, and just definitely put some money into quite a few of them. If the budget is as we expect, then these are the ones that would really move up. There's a safety net in terms of probably valuations, I think, though of course I'm not saying that on the basis of data right now, just conjecture. We'll deal with that when we have the investment review. And also technically, and what we are seeing here from December, Jan, Feb, a nice rounding bottom that is being formed. Let's see it on weekly. Yeah, you can see it much better on weekly, right? So this is a rounding bottom. I hope it's very clear. Once it breaks 11,000, we'll probably see the next sharp up move on metals, right? So metals is, from an underdog perspective, my favorite right now, I think. Okay, oil and PSUs, small caps also. So this is small cap index, so didn't break that level. Let's see if that holds. That could also be a trend, and that could be a major breakout for the small cap index, and then takes it to the next life high. Oh, why it is green? Okay. So multi-month ascending triangle, and if that breaks out, small caps could see a big move. And then Sensex leave. Okay, there's something interesting on the Sensex I just saw. So this is the monthly chart of the Sensex, and I saw something, so I wanted to bring it to our attention. So this is the monthly chart of the Sensex, please note. Okay, it's not the daily, and what we have is a hanging man on the monthly chart. So for Feb, we have a hanging man. So that's really interesting, whether that could be indicating some sort of a top in formation or what, too early to say. But I've been saying this, we've gone from 20,000 to 29, almost 30,000. That's a 50% increase in the market with more or less no correction in terms of price or time. And I've been saying this, that at some point that's going to happen. It's a question of when, it's not a question of if. So just be prepared for that. So like we said, the budget could be, really high on hopes and all that, and once it goes back to business as usual, we could see a correction that could come. Right? So that's been a recurring theme. Do you have any other sectors? No, that's back to the bank nifty. Okay, so this is what it is. So that's the sector review pre-budget. Okay. I will send this out right now after the session is over to everyone, so that you have this ready. Normally I send it with just remind me to do that, to send it immediately after the IMR is over, instead of waiting for the recording to get uploaded, right? Trade, invest. All right, done. Let me put this there. So we can clearly divide it into these groups, long and short. Okay, done. Any questions? Any comments, anyone?
So are we going to stop here?
Yeah, we'll stop here. I think individual stocks will take too much time now.
Yeah. Okay. No, I don't have anything.
All right, done. Okay, so thank you. Hopefully the recording should be up. Good night. And those who are coming for the live trading session tomorrow will start around 8:30. You can even come in around 9 anyhow. But it starts at 10 or 11, Balki?
I think budget starts at 11.
11, is it? Okay, so come in at your convenience and we'll take it from there. Yeah. All right, thank you. Good night.